Hey guys, in today's video we're going to be going over how to recover a blown up account. And when I first blew up my account, I blew it all the way to $50, and then I ended up making back $750 of it, and then I took a lot of that out, put it in my bank, and then I put that into my other account. So yeah, so when I had $50 into my name after I blew up my account, the first thing I did was I stopped buying breakout trades, and the reason for that is you want to find the best risk reward setups. And when you trade a breakout trade, let's see if we go to a breakout trade. So let's say this is the breakout trade, right? This is pre-market high right here, and let's say you see this candle go over. When you take this trade, your risk to reward is gonna be like, there's gonna be more risk on the loss side than there is on the win side, because look how overextended this is. So like RSI is probably really high up there, and if we draw a zone right here, and you take the trade right here, your risk is going to be what, all the way down the VWAP, and your reward is probably just going to be about the same thing, right? So that's just horrible risk to reward. You don't really have anything to, like, it's kind of just gambling at that point. And so like not taking breakout trades is important, and the trades we do want to take are dip buys. So my suggestion is I would try to find a strategy like buying off the EMA or buying off a VWAP, or maybe like fibs, and buying dip buys instead of buying breakouts. Because what that does is when you buy a dip buy, that's going to give you way better risk, or that's going to give you way better reward for the risk you're getting. And the first tip I'm going to give you guys, this is not financial advice by the way, is no matter what, always have a stop loss at 20%. So when you're trading, when I first blew my account, my stop loss was like at like 30 or 40, because I'd always be in a trade and I look at the chart and I'd be like, oh, it's down 30, but it looks like it's about to reverse, and I was kind of just hoping at that point. But when you're trying to recover account, make sure your stop loss is always 20%, and you guys gotta trust me in that, because if it's not 20%, or it could be 15 or even 10. Maybe if you take really like dated contracts, it could be 10%, right? But do what works for you. I think a 20% stop loss gives you enough room, and it's like tight enough so you're not going to blow up your account. And say you do start with $50 or $100 after blowing up your account, that gives you at least 5 trades to get back your money, right? Because if your stop loss is 20%, then that's going to be 100 to 80, and then 20% of 80 is even like less, so it'd probably be what, like 62 or 64 or whatever. So that's probably going to give you more than 5 trades. But yeah, but my suggestion, especially if you have like a $50 or $100 account, is literally do not trade one play until you see like the most perfect setup. Because if that first play is a bad play, you're going from what, 100 to like 80, and now you're gonna have less money, right? So my suggestion is you need to be really patient, find like a perfect setup, like maybe an ascending triangle breakout or something. And the reason why ascending triangle breakouts are better than like double top breakouts is because say we do have an ascending triangle. I'll just pretend this is an ascending triangle even though it's not. So say you see an ascending triangle right here, right? If price gets up here and it kind of just like slowly consolidates and then breaks out, your risk is under this trend line. So your risk would literally be like this compared to the reward would be way over, so that'd be much better risk reward. So that's the type of breakouts you want to take. You don't want to take breakouts like I explained, like trend breakouts or like support and resistant breakout. Those are really bad risk reward. So if you do have that small amount in your bank or in your brokerage, be very patient. Like when I first started back with $50, I didn't trade for like 2 days straight because I didn't see like a perfect setup. And when you see that setup, it will call your name. It'll be like, hey, come trade me. You're about to bank. Like, you'll see it. Trust me. Like, when I first saw it, I was like, okay, this is definitely going to bank. And I felt totally comfortable putting all the $100 I had, or I think it was 50 at the time, into it. And then I ended up getting 120% off the play. So I went to like $120 right after that. So That's very important. So so no matter what, always top out 20% to no breakout trades. And that's with an exception of like if it's an ascending triangle. If there's good risk reward on the breakout trade, then you can take it with like a tight maybe 10% stop instead of a 20% stop, because breakout trades are very, very risky. So I'm gonna say no breakout trades, dip buys only. And again, that gives you the best setups with the best risk reward. Yeah, so like let's say I'm trying to, let's go in the 1 minute real quick, and let's say I draw like a Fibonacci. So say I see it retrace down here from this. Okay, so when this, so on the 1 minute, this is in a downtrend now because it made a lower high, right? So once you see this, and then you see like a clear reversal off of this hammer, you could draw the fib from here to here without even having these, right? And then you could look for like a retracement, like a Japanese candlestick. Like if you don't know how to read candlesticks, go watch my other candlestick video. But now you're trying to look for one of those candlesticks off of the either 61.8, 50, or 38.2, which would be a nice dip buy, right? And clearly we have a Japanese, like it's like a, I don't even know what to call it. It's like a doji or a hanging man candle. So either way, this is very bearish candle. So this is when, after this candle closes, this is when you take the trade. And again, this is very good risk reward, because let's say your risk is if it breaks the 61.8, because that's the last good dip buy fib, and your reward is the end of the fib and beyond, because that's where you're supposed to take price targets. So look, that's already like a 1 to 5 risk reward ratio, and it's just coming from a dip buy. So these type of dip buys are the stuff you want to do, right? And if you don't know how to use Fibonacci's, another way to do this is turn on your moving averages. And I suggest using the 9 and 21. I actually use the 11 and 32 because it gives me a little more room. But you can do what you wish. And something that I do is if I see we're trending up all day. By the way, these are really good on trend days, which we do have trend days quite a bit, but they are very hard to use in choppy days. If I see one line is being respected, like look, it's holding this 11 EMA very well, I'm not going to get in right away. Like maybe I might get in because of how much it's holding with like a stop loss of a 5-minute close right under. So say I did see these consolidating over the EMA, I'm like, okay, they're consolidating over. There's not much risk if I went long. It would just be like a 5-minute close under, and your reward would be like a nice pop. And like say I didn't even know it was going to pop that high. Say I thought it was just going to go this high. That's still really, really good risk to reward setup, right? So make sure you guys are taking these really good setups. And another thing you can do is once you see this respected and you see we're in an uptrend for the day, next time you see it tap the same EMA, you could just get in automatically with a stop loss under the 5-minute close. And like the problem is some people use EMAs, but they have like 5 in their chart, and some aren't respected some days and some are. So clearly today the 11 is being respected very well. So the next time it touches 11, that's when you want to get in with a stop loss under the EMA, right? Same goes to VWAP. If you're getting in, like VWAP is very, very useful on some days, and other days like this it's not. So see how it closed over the VWAP. Retail traders would go long here, and VWAP is used by institutions, but you should probably use VWAP more as like a magnet. So once it's this overextended from VWAP, you definitely do not want to go short too heavy, and if you do go short off the EMAs, make sure it's light, especially because this is really far away from VWAP. So kind of treat the VWAP as a line that it's always going to go back to. You can treat it as support and resistance. I do that sometimes. Like look right here, you could have gone short, you could have gone short here, you could have gone short here. So I do that sometimes, but like sometimes you will get faked out like this. And other times it is a really good indicator of when, hey, it does break this, but then it breaks back below. That's when you could get puts with a stop loss and review up again, which would be very, very good risk to reward, right? So that's just an example. So make sure you're entering as close to, so I'm going to say enter as close to EMAs / fib retracements as possible, or VWAP, doesn't matter. So enter as close to those as possible, because your chance of entering those. Oh yeah, that brings me to my next point. Go with the trend. So make sure you're following the trend. But the chance with, like, when you enter close to the EMAs and fibs, your chance of getting stopped out at 20% is already way less than if you took a breakout trade. So that's a thing. And if you do have a small account because you blew it up, like, don't go in with a mentality that you're not trading for the day. That's what I used to do. And then, like, if you see a setup that's just like perfect, calling your name, like take that setup, because oftentimes, like, I didn't see those every day, but I did see those like every other or maybe every 3 days. I would always take those setups, and it's definitely something I'm still working on. I do still over trade quite a bit on my normal account, but that it's very important to going in with the mentality of not wanting to trade, because that will help you stay a lot more patient, right? So that's very important. So always have a stop loss at 20%. No breakout trades, dip buys only. Enter as close to the EMAs / fib retracements as possible, because that, again, that'll give you the best risk to reward. Go with the trend. And last thing, try to make your position sizes the same. So after you've blown up an account, a lot of people, they try to full port everything. And if you do have $50 to $100, yeah, maybe you could full port stuff like the first couple trades, but then try to stick with like the main, or try to stick with the same position size. So maybe if you have 50, you put 50 into a trade and you get 20 off of it. So now you have 70. And then the next trade, try to do 50 again, because you'll have an extra 20 in case you lose 20% on that 50, and then you'll be back at 50 again, and you'll be able to put 50 into another trade. So try to do the same position size as much as you can. A lot of people try to keep full porting just to get their blown up account back quicker. And $50 to $100 you can literally get working one day at a job, which is not hard to get $100 or $50 at all. So if you do lose that money, you shouldn't be too emotional. I mean, some of you guys might be, but just know it's really easy to get that money back in other ways not related to trading. So that's very important to understand. So go with the trend, have the same position size. And other than that, you guys got to realize this is not going to come in one day. Like some days when I was doing this, when I was trying to get back my money from my blown account, I didn't even trade. And if I were to do the same thing now, I probably would be a little more impatient. So making this video definitely does help me like understand that I do have to be a little more patient, right? But also, when I was doing this account, I was also on a margin account, and people say switch to a cash account. But if you're on a cash account, you're gonna have more. You might be less patient, because you might want to trade more because you know you can. But if you're in a margin account, you're really gonna you're gonna be really selective in your plays. So being in a margin account definitely helped me, because it restricted me from taking too many plays, which I probably would have done. So that's like, if you're like me, then maybe using a margin account is actually really good for you. But yeah, other than that, stick to those rules. Read these rules, like write these down somewhere in a notepad. At the end of the day, read them and ask yourself, did you follow all these rules? And if you didn't, then your day was failed. Even though you might have been green, you should be following these rules, because these are very important. And these would be my rules, but you could switch these up a little bit, depending on what you guys are like. But this might be like give you a good starting point, and you can even add a couple more. But I think these 5 are like the most decent rules for like helping. Like they're the most simple. I'll say they're the most simple. So they're the most simple to helping you like recover a blown up account, right? So yeah, that's all I got. Make sure to give this video a like and subscribe with notifications. I'm going to be posting a lot more videos this summer. My classes are almost over, so that'll be good. And yeah, make sure to follow me on Twitter. I do have a Webull referral code in the description. Feel free to use that if you want. But yeah, hope you guys enjoyed. Leave a like, comment, subscribe, and yeah, peace. Hey guys, so I recently just got done recording this video, and there's two important things I left out, which I want to go over real quick. And the first thing, when you hear me talk in the video, I'm gonna be like, have a stop loss of 20%, blah blah blah. But the one thing that I actually did once I started, like, I take a few weeklies at first. When I had $50, I took weekly contracts at first. But once I got into like the $200 or $300 range, I actually started taking contracts that were like 2 or 3 weeks out as day trades, just because it had a less chance of hitting the 20% stop. So if you have a decent amount, stop taking weeklies. Do not trade 0 DTE. Take like 2 or 3 weeks out. Trust me, it'll help you a ton. And if you have that rule that I talk about in here of having that 15 or 20% stop loss, there's going to be way less of a chance it hits that stop loss, right? So that is one important thing you want to keep into account. And the second thing is, do not take overnight trades or over the weekend trades. When I blew up my account, I always try to play stuff over the weekend and overnight, and they'd kill me on Monday morning. Like, I would be open, like my positions would open at 30%. I remember I blew up a quarter on my account one time over the weekend. My position actually opened down 50% because I took calls and it gapped down. So do not hold overnight. Make sure you guys are all cash at the end of the day. Once you guys have a lot of money, maybe you could take some overnight trades like later, but if you blow up your account, I really would say do not take overnight trades. That is very important.